The second bullish scenario, which I don't mind either, is some kind of attempt to rally and then subsequent failure and kind of like a more laborious move to the downside into the end of this swing, preferably into the higher low, and then from here starting to go up again. And then we'll talk about this as being a big, huge trading range, and this is some kind of minor sign of strength as an upthrust action in phase B. For those of you who are familiar with phase analysis, going into the reaction into the actual phase C of the much larger reaccumulation in a much bigger secular uptrend. So we'll have to see this. This is scenario number 2, bullish scenario. And scenario number 3, which is bearish scenario. How would the bearish scenario look like? There are 2 requirements for that, or maybe 3 even. Attempts to go up and then failure. So we need to commit to the downside, and we need to commit to the downside kind of like in the same manner as we did here, where the price and specifically the close extends away from the support, and that commitment happens, further down as the price goes down. So we see that, for instance, here, we see that here, we see that here, and it's a very, very kind of common pattern in the downtrend or in some kind of areas of volatility where commitment to the downside, extension of that downswing starts confirming the character of the bear market. And then we still go down, and we go down on the volatility that is increasing and on the volatility that is way, way more vertically down. So like verticality of the down move would increase, right? So the reaction in the bearish scenario here would look much more threatening than the rally itself.